What's up, guys? Welcome to the pregame show with Rustik. Today we're going to be doing our pregame, pre-recorded because of the holiday, New Year's Eve. Our normal time that we would be doing the pregame show is 4 o'clock Pacific, 7 o'clock Eastern. So I wasn't sure with the holiday how we would have participation. People might be going out, so decided I would do one last pre-recorded episode. And then hopefully we can get back into the normal routine swing of things after the new year starts. So hopefully you guys are all going to have a happy new year. Maybe looking to set some goals for going into 2024 with your trading. And, maybe you're looking to make some adjustments. Maybe you're looking to, make a little bit more money. Maybe, look for some ways to correct some of the losses you may have had. Whatever the goal is, let's make it a good 2024. So let's jump into the pregame show itself. So for those of you who have listened before, the pregame show is just setting up your chart for the following week ahead. And it's using smart money concepts, time frame analysis. I will post the link where you can find this screenshot in the comments down below. If you don't already have it, but it's a helpful tool to have, and it comes from a website that has a lot of smart money concepts, kind of cheats or quick references, if you will, and so it's nice to be able to have that website to access. So first thing we do when we're setting up our new week's chart is we start with a fresh slate. We take off everything from the previous week's chart that we may have been live charting or we may have had from the weekend before. However you like to do things, we start with a fresh slate. We throw up our screenshot, copy and paste directly onto the chart so we can see the different things that we're looking for on the different time frames. So we start with the weekly. I'm using Tesla here. I will see maybe if I can do SPY or maybe one of the Mag 7s. Maybe I'll do Amazon this week, but we can potentially take a look at a second one. And so we start with the weekly chart. The first thing we're doing is we're looking for the next draw on liquidity. So draw on liquidity is going to be your next move to a major swing high or a major swing low on the weekly time frame. And some of the things that we look for is buy side liquidity, sell side liquidity, equal highs, equal lows, and fair value gaps as being those draws on liquidity. So we're going to grab our horizontal ray. You can use ray, you can use a line. I use rays. And we're going to look for our next major swing highs and swing lows on the weekly chart. And that's going to be looking at a range. And so we're going to say on the weekly time frame, our biggest swing low is down there. And the current range that we're in, we're going to look at this range right here, which was that move back from January of 2023. So basically all of 2023, we're going to look at that range specifically. So we're going to look at that candle wick there on the swing high. We're going to look at the candle wick low here on the swing low. So that's our range that we're looking at. We have not broken out or below those highs or lows. And we've traded inside that range all of 2023. So the next thing we're in that, we're going to label this one buy side liquidity. So if you don't know how to do that, you just double click on the line and it pops it up there for us. Here we got sell side liquidity. Next things we're going to look at is we're going to look at equal highs and we're going to look at equal lows, and then we're going to look at fair value gaps. So we do have some equal highs or relative equal highs, but they're higher than our current range. So they're not really that we're not really that interested in them because they're outside of this range. We'd have to break this range to get to those equal highs. I do think we'll come back for them at some point, but they're not extremely relevant right now. We also have equal lows or relative equal lows right here. So you could draw a horizontal line, or you could use a trend line, and you could take that and you could take it to the exact wick, and you could label it equal low. It doesn't have to be perfectly equal. Relative equal is good enough. Okay, that's the only equal highs or equal lows that are close enough that would be of interest right now. I don't see any other ones that are even remotely relative. So we'll call it good on I've already broken that one. Yeah, we'll call it good on the equal highs or equal lows. Then we're going to look at fair value gaps. So fair value gaps are a 3-candle setup where you're looking at the in a bullish fair value gap. You're looking at the top wick of candle 1. You're looking at the middle candle 2, and then you're looking at the low wick of candle 3. In a bearish fair value gap, you're looking at low wick of candle 1, then the middle of candle 2, and then you're looking at the high wick of candle 3. So with that being said, let's look and see if there's any fair value gaps that are of interest on the weekly chart that could be holding us above or below current price. So we've already broken out of that fair value gap. We have this fair value gap that has, I don't know if you'd call that close. It's pretty close. We could label it on the chart just to see it, but I don't think it's going to offer much resistance there. And we more so care about ones that have come after a change of character or a structural break. So this one was a, let's see, no fair value gap bounce. So there is a fair value gap here. It looks like it may have closed or come very close, which is where we offered our rejection here. And then we have this fair value gap that is most recently closed. So I'm not gonna actually put a bearish fair value gap on there. I don't believe that there's one of relevance. But what I do see is I see a bullish fair value gap that we've traded into and never actually closed. So I'm gonna throw that one on the chart. The bullish fair value gaps on my charts are green, and I actually want to remove. On the bigger time frames, I don't like to actually see the boxes there. I just want the lines. So I'm going to make them green, and I'm going to label it. M1 fair value gap plus. So that tells, or sorry, it's supposed to be W1. So that shows me that it's a weekly, it's fair value gap, and it's a bullish fair value gap. So that one is of interest to me because right here we saw a change of character where we had come down, we came up, we came down, we came back up, we broke here, we had displacement, and we've now traded back into that displacement and found support. So that to me shows an important fair value gap. And then we're looking, yeah, so we got fair value gap. Then we got this one right here, which again is lower, so it's not as concerning to me right now because we're not near there. But that's down in the 135 to 163 range. So that also is a weekly fair value gap that we had an inverted fair value gap here, traded back down and found support, rallied off that. So that is also an important fair value gap, but it's just not near where price is, so it's less relevant at this point. And then, yeah, that's what I got for fair value gaps. Again, this one not relevant to the bearish side, although we have again found rejection right here in what was this bearish fair value gap. So if you were going to put that on your chart, it would be this candle low here. You want to make sure you identified it as red wicks, and you can see, I mean, maybe it's open. It'd be, we'd have to blow it up and see if that candle actually closed because that wick probably isn't perfectly on it. Anyways, we're back up in that same area right here, and we found rejection again. So it could be important to look at and just say, okay, there was a fair value gap here. We've rejected again. Are we going to cycle back down into this fair value gap, or are we going to push through it and then head towards the liquidity? Those are questions that we need to be asking ourselves when we're looking at different things like this on the chart. So we're going to drop down into the daily chart. On the daily chart, we are looking for key levels of premium discount arrays. Premium meaning that we're on the higher side of the most recent dealing range. And so the dealing range again is this large range here that we found on the weekly chart, and we are inside of that. And so if we want to use our Fibonacci tool, this is a really easy way to, if you can't eye it out, which it's kind of obvious to me that we're in premium, but you could also use your Fibonacci tool, and you could do your premium discount setting, which I've showed before is 0, 0.5, and 1. And you can see if we were to extend that out, that we are currently in the upper half of premium. right? We got our equilibrium here. We got our discount here, current dealing range here. And now we are in the upper half of premium, coming from premium down to equilibrium, back up to premium in the upper half of premium. Okay, so that just tells us where we're at in the cycle of a dealing range. And so what we want to look for on the daily chart is optimal trade entries, what our daily bias is, and then high time frames points of interest. So on the high time frame point of interest, we're looking at the daily chart. So we will throw some additional, let me get rid of this here. We will throw some additional highs and lows in there. So we're going to use that swing high. We're going to use these equal highs on the daily chart. And they're both going to be buy side liquidity. Right? This is engineered liquidity so that when we head up, we have liquidity here and here. Right? So that's why peaks and valleys are made. So that we have engineered liquidity for the way back down and for the way back up, so that the algorithm can effectively offer liquidity at buy side or at sell side. We also have this swing low right here. That's going to be sell side liquidity. We have our equal lows here, okay, which also we could just extend out. And let's just make that a straight line. Even though it's equal lows, it's also sell side liquidity. So we got liquidity there. And then we have liquidity here. So those are all internal to the dealing range, right? They're all liquidity targets, but we have our dealing range being this swing low to this swing high. Okay, that's what we're paying attention to. And then this is all internal buy side and sell side liquidity. We also want to look at optimal trade entry. Where was the most recent optimal trade entry that we could identify a bias on? Well, we talked about that. That was down here. Okay, oops. We saw a bottom. We saw a run up above these old highs. We saw us come back down into a fair value gap, into a optimal trade entry range that developed our bias being bullish, which has then seen us come up here, come back down, one more leg up. And so that's the most recent optimal trade entry. We're not going to look at any other optimal trade entries yet. If we were to continue to sell down, which we have not broken this low here, so that has not seen a change of character. If we do break that low, we have our displacement candle. Say Monday comes out, right? Because we have what's developing, and I'll zoom in on this so you can see what I'm talking about. But you can see we have what is potentially developing to be a bearish fair value gap in here. We'll have to see what Tuesday's candle brings. But if Tuesday's candle does not come up and overlap this low, then we have a fair value gap in here, a bearish fair value gap. Right? And if Tuesday's candle breaks below this low, we have a change of character. That changes everything. Right now, we are in a 2-day sell-off in an uptrend. But if we don't come up and we don't overlap this, and we do come down and we break this low from last Wednesday, that's a change of character on the daily chart. We have displacement in this candle with a fair value gap. At that point, we would be looking for price to come back up into that fair value gap and sell off from there down to sell side liquidity. So you can expect that. If that happens, you can definitely expect that. But right now, it hasn't happened. And so our bias does currently still remain bullish. Okay. Again, things can change that. But right now, we only have 2 days of selling in a current uptrend. If you were to use trend lines, you can see we have not broken down below the low of the support. And so we could even have one more day sell off, right? That might look bearish, but we could still find support here, and then we could still rally up from there. So we'll be watching that, but our bias is still bullish at this point. We have not caught in anything that has given us an indication that we've seen a actual smart money reversal. Then we can also look at additional points of interest. Sometimes we look at those and we use our fixed ranged volume profile. So if we were to take the dealing range currently right here at 254.20, which also happens to coincide with where some of our highest gamma readings were, where also some of our max pain for options contracts were on Tesla at 255. This current dealing range, we have a the highest volume profile node at 254.20. Okay, and if we were to adjust that to only take the swing high into the current range that we're in here, we also see 253.48. Very similar. Okay, so we're spending a lot of time inside. Now, if we were only looking at this bullish range here, it changes the narrative a little bit. 233.94. It's where we spent a lot of time in that consolidation. So it wouldn't be off the table too to see us come down here, back into consolidation, and then see it pop up from there. I'm not going to label those on my chart this week. I just want you guys to know that you can use the fixed range volume profile as a potential way to look at additional high time frame points of interest. I think I have everything I want on the daily chart so far. So now we're going to go down to the 4-hour chart. So let's blow it up a little bit more. Okay, so on the 4-hour chart, we have a little bit of a different dealing range, if you will. We have a swing high, we have a swing low, okay, and we are in premium again on that particular dealing range, but we are coming off of discount. So we don't currently know yet if we're expanding, okay, expanding above old highs, or if we found rejection and we're going to correct back down to old lows. Those are the different things we're watching for. But on the 4-hour chart, when we're setting up our chart, we're looking for additional premium discount arrays that aren't already on the chart. We're looking to potentially adjust also. I see that that one wasn't perfectly on. So we'll adjust just a little bit to make sure that they better reflect where the wicks actually were. We're also going to look at, again, optimal trade entry, and we're going to look at market structure here. So one of my favorite tools to use for market structure is the Smart Money Concepts by Lux Algo. If you're a member to the Traders Helping Traders Discord, which is one of the Discords I'm hanging out during market hours, and I'll leave the link in the description below. Their premium members over there have a custom indicator that has been built by the admin at Traders Helping Traders that has many of the same things that the Smart Money Concepts by Lux Algo has, and even more, if you will. It's a really great indicator, but not everybody who's going to be catching this video has access to that. So I'm going to use the Lux Algo indicator just so you guys can see market structure. All right, so another one you can use if you don't want the Smart Money Concepts, which has all kinds of other stuff on it. They do have, Lux Algo has just a market structure, which actually shows breaker blocks as well, which is also a good indicator if you were just looking for market structure. But I'm going to use the Smart Money Concepts one. So you can see here, we'll start with PD arrays, right? I think I got everything I mostly want. I will throw one more premium array on from just the most recent high. And I will throw one, even though it's listed here as a previous week low, I will throw one right there because that's where our, this one already shows a change of character. So we'll have to see on a lower time frame chart versus the daily chart, we're already showing an indication that we made a change of character. We also have displacement here in this candle. And so we'll have to see if we pop back up into these fair value gaps. That'll be interesting to watch on the 4-hour chart. If we pop back up into this fair value gap or this fair value gap, right, we could see bigger flush because we did get that change of character right here that you couldn't see in a daily because that all happened in 1 day's price action, but you can see on a 4-hour chart. So that's one sign that we're looking for. And if you see, say we do take this low or we don't take this low, and we pop back up, say, into this fair value gap, which would probably be the expectation, you could also see that has a really nice look for what looks like a head and shoulders pattern. And so by looking at this, actually, and I'll go over this more in depth in my weekend video. I bet you we do something like this, and then come back down somewhere into this equilibrium here, maybe something like that. So we'll be watching. Totally possible. Also possible that we just continue up from here. But we're going to look at premium discount rates. So I got previous day high here, and that was the high of Friday. And I don't care about the low here because it's above the low of last Wednesday, the 20th. And so I only care about the high from Thursday. So actually, it's not previous day high. It was Thursday's high. So it's buy side liquidity. Okay, so those are the most recent like short time frame range that I'm looking at to see if we break below. Then we're also looking at optimal trade entry, and again, the most recent optimal trade entry was down here, and that's going to be from low to high. Okay, we came back down below equilibrium, down into discount, and if we look at our optimal trade entry, we can see we came down below the 61.8, but not quite to the 70.5, but that's the range we're looking to trade into. And you can see also on the 4-hour time frame, we had that change of character. We had displacement in here. Okay, our first fair value gap right there after, or it was before the change of character, but first fair value gap, change of character, traded back down in to that fair value gap, which is where we found our support. So not surprised that we didn't get all the way down to 70.5. If some of you guys are waiting around for 70.5% being the optimal trade entry like level instead of range, you need to be looking for that displacement candle. Okay, that first fair value gap right before, right after that change of character that we're going to trade back down into and find support, which is exactly why price comes right back down exactly into that first fair value gap, finds support, rallies off. Okay, so that's our most recent optimal trade entry. We do not have a confirmation here yet of a smart money reversal, so we'll be looking for a move back up, right? If we take this low and then we have a move back up into our displacement and we find support, that is going to be our short entry for smart money reversal. So we need to be watching that specifically. But we have to take this low, in my opinion, before we pop back up to that displacement. I'm not sure. I'm not as confident in that trade there. Then, like I said, last thing we're looking at is market structure. On the 4-hour time frame, we did have that change of character, which is bearish. And so, I think no surprise that we've seen this sell off. So there's a bearish change of character. And again, we're looking for a smart money reversal to happen to see if we then continue down from here. Go to the 4-hour time or the 1-hour time frame now. On the 1-hour time frame, the range I'm specifically looking at is swing low, swing high. Okay, this current dealing range on the 1-hour time frame. And we're looking to see if we can identify if there was a market maker buy or market maker sell model anywhere in there. So I don't think we have any confirmation that there was a market maker buy or sell model. We haven't come back to catch that optimal trade entry, which would show us that there was a market maker model in play. But we could say within this deal, so market maker buy and sell models can happen on all kinds of time frames. They're fractal. You'll see multiple market maker buy or sell models inside of like a daily candle. You might see multiple market maker buy or sell models. So they are all over the place. And basically what you're looking for is something like this where it comes up, comes back down, right? We filled the gap. We got to an optimal trade entry on this little move here. And then we rally up. Okay, we break above old highs. Okay, so this is market maker buy. and then we reverse back down. And so you're not necessarily looking to catch both directions, but when you're looking at market maker buy or sell models, you're really looking for, to catch a directional move, if you will. Let me see if I can find another better example. Down here back in October, that's a very clear example of a larger time frame one, even though we're on the 1 hour. Right? We break this low, we come down, we pop up, come back down to optimal trade entry on a smaller. We looked at this one here, but on an even smaller one, you see that first change of character. Let's zoom in there. You see that first change of character here after we already took the previous low. Right? We get displacement in this candle. Okay, we run up and then we trade right back down to that displacement candle right there. See? Boom. There's your entry, market maker buy model. Okay, and then what do? We run on old highs or old lows, depending if it's a market maker buy or sell model. Okay, so it ran on old highs. So that's a small one. Then when you're looking here, market maker buy model, right, in here as well, we broke the high, we came back down, we traded into displacement around where a change of character happens. Okay, there's your entry, right? What do? We run on old highs. Did we get there? We did. It took some time, but right here, you could say there's an old high right here, right? We ran on it. Old high right here, we ran on it. So that's a little bit better indication of a couple different market maker buys in there. Now we are currently at a point where we might be looking for a market maker sell model, but what we need to see is price come back up to this displacement range, find resistance, and then that will be our entry to go short to run on where? An old low down here, 228. Now we're looking also a 1 hour time frame. So we're currently, I wouldn't say we're in a market maker buy or sell model. I think we completed right here, and we're looking for a new market maker sell model to set up. So I'm not confident in calling that model right now. Fair value gap, looking for some fair value gaps. We're going to look at this change of character. We're going to look at this fair value gap right here as a bearish fair value gap. Okay, and on the lower time frames, I do want to, see a little bit more. So we had a change of character. Okay, we've come back down. We popped up to it, but I want to see us trade back up to it even further. Potentially up to this displacement, but I don't think that's going to happen. But I want to see us trade back up into this displacement. One more time, see if we can find support there. But we do also have, because we traded back up to it once, we also have a second fair value gap right here. So what that does tell me is if we drop down on Tuesday, we might only trade back up here before we target that low. Right? So just be watching those two fair value gaps on the 1 hour time frame. Both of those are going to be very important fair value gaps. If we take out one, we might hit the other. I do think we'll probably find some resistance and then possibly target this low. I will be looking to exit my 255 calls. If we get up to this fair value gap above 255, I've averaged down into them, and so I think that they'll be fine. I'll be in profit if we get up here. If we start heading higher, I'll reposition and I'll reconsider. Then looking on the previous day high, previous day low, we already have that as well. Basically, I don't really care about the previous day high. Previous day high is going to be over here, right here in this fair value gap. Previous day low, basically this low here. So less relevant to me because they're inside of a dealing range. Then if we look at the 15-minute, again, we're looking at intraday structure. We're looking at London price. We're looking at price entries. So this is more live time than setting up charts ahead of time. Some of you guys have shared my chart link with you. I will share my chart link in the comments below as well. If you want all the same indicators I have access to. I use them at different times. So what I'm going to show you here is going to show the London session with extended trading hours turned on. And so what you can see is where the London range was. And so London range can give you important information, doesn't always, but oftentimes what you see is London range develop, then you see manipulation occur, and then you see distribution. So here we got London range, we got manipulation. Okay, we start selling off, we get distribution down below London low. Ultimately, we got large distribution Thursday and Friday. Similarly, on Friday, we have London range. We never actually saw manipulation push higher. We did just kind of see price ended up selling off. So it's not always perfect, but London range can give you some information. Back here on Tuesday, December 26th, you got London range trading inside that range during pre-market manipulation that runs the low of London, and then we ran up from there. So sometimes having that information can give you valuable insight. Again, back over here, Friday, December 22nd, London range, manipulation, distribution occurred below the London low, right? So we got our distribution leg. So different things you can look for when you're trading, and that's one of the things that we look for is kill zones and London session. More applicable to ES and futures because they trade around the clock, but can give you some important information with Tesla. Another indicator that you can use is market sessions. Market sessions can give you, we'll drop into the 5-minute chart to look at this, but market sessions can give you the option for mapping out different areas or different time macros. So I have 2 different time macros mapped out here when I use this. And so I have it set as Q1, Q2, Q3, Q4. And this is all inside of a bigger Q3, which is where distribution is supposed to occur. And then the second set of Q1, Q2, Q3, Q4, this is in fourth quarter or quarter 4, which is often where continuation or reversal happens. So sometimes I pop these up to see, are we catching, are we seeing any patterns develop? Q1 is supposed to be accumulation, Q2, manipulation. Here we get our manipulation to the upside, right? And then into Q2, Q3, we get our distribution, okay? And then Q4 is more or less a continuation. And this is a distribution leg, right? Like I said, it was in a quarter 3. If you were to look at like a full 4 quarters on the New York. And then you get your last quarter continuation where we do find a little bit of reversal. So those things can be useful when you're, again, looking at the lower time frame charts and you're studying things like quarterly theory or other, let me see, where did that go? Trying to find there it is. So when you're looking at your chart intraday and you're in your trading session, you're looking at, these kill zone time and you're wondering, well, what is that kill zone time? Well, those kill zones, let me pop this up, are Asia, London, New York, AM, PM, right? So if you throw some more of those on, you can see inside those kill zones is where I have my quarters all divided. Right? This first Q1, Q2, Q3, Q4 is inside the New York AM session, as well as this continued Q1. And then these finish off before lunchtime starts. And at lunchtime, I have no interest in trading. And then you got your PM session, but I don't have quarters divided in PM. PM is sometimes less heavily traded. I'm more focused on the morning session. But anyways, those are different indicators that you can use if you want to look at some of those things, some of those additional things that we have on our smart money concepts time frame analysis, right? As far as our kill zones and our intraday structure. So you can use them in tandem with your market structure, whether it's Lux Algo or the Traders Helping Traders custom Pinewave script. you can use those time frame macros in conjunction with your market structure, and you can be looking for your price entries inside those kill zones. We also track the silver bullet kill zone. Some of you guys may follow me on that as well, where there's usually a good setup, and we're looking for structure, and we're looking for fair value gap and displacement on the 1 minute time frame. So then again, also on the 5 minute, we're looking for the intraday liquidity grabs and market structure breaks. Something I want you guys to notice on Tesla, whether it's on the 5 minute chart or whatever, is that we made an attempt to take this low and we didn't actually get it. And that's not by accident. That's by design that we didn't take that low, because that gives us another chance to either gap down or take that liquidity on Tuesday, and that's what I anticipate before we head up. Or even if we head up, that still gives us that target down to the downside that looks like we'll deliver on that old low, because we did not hit it, and it's most likely that we will. So that's our Tesla chart. Let's go ahead and look at another chart and see what we can do. I've done SPY before. Maybe let's do Apple. Let's try Apple out. So we'll start at the weekly chart. We'll turn off all of our indicators. We'll make sure that there's no drawings on the chart. Okay, we'll reset the chart here. We'll drop on our time frame analysis screenshot. And we're going to identify the next draw on liquidity through the most recent dealing range, swing high and swing low. There's our most recent dealing range. So we've already taken the swing high here. So we've already drawn on liquidity most recently to the upside. Okay, so now we have our dealing range down here, 123.97 as our swing low. And we're going to look at buy side, or, oh, well, that's what we got. So we got buy side liquidity. And then we got sell side liquidity. Is that a higher, is that a new high? Okay, yeah. So we set the new high. Let's see if we got equal highs, equal lows, or fair value gaps. So these are really pretty much relative equal highs, but we'll leave that on there. And then you could call these wicks relative equal lows, but we'll just label it off as internal buy side when we get to a different time frame. And then let's see if there's any displacement, recent displacement that we can monitor as far as fair value gaps go. And I definitely see a bullish fair value gap here. That's going to be of interest. And that's going to be a 1 week fair value gap plus. Okay, so what we will be interested in seeing is that we did close above old candle body highs. So this is a change of character here, or a break of structure, however you want to look at it, because I guess we were already trending up, so it'd be a break of structure. And then we have a displacement here. So we could anticipate that we trade down into this displacement or this fair value gap, and then find support and rally off of that. So that's the main one we'll be watching on the weekly chart. So then let's drop down to the daily chart. Where did our thing go? All right, so we got our dealing range. Swing low, most recent swing high. Now we're going to look for premium discount arrays that are not on the chart already. So we got a discount array right there. It's going to be internal sell side liquidity, internal to our dealing range. Okay, we also have sell side liquidity here. This is all manufactured liquidity. It's areas for us to hit where the algorithm will offer price on sell side, or when it's heading up, it offers it on buy side. Buy side, buy side, buy side. We took it, right? Now sell side, potentially sell side. Back into fair value gap for liquidity as well. So on the daily chart, we got our premium discount arrays. We got our internal sell side liquidity here that's available. We're going to look at the most recent optimal trade entry. And that looks like potentially, looks like we saw a micro on a smaller time frame. We'll see that better. But it looks like we saw an optimal trade entry right here. We had a swing low, we had a swing high, back up into optimal trade entry. We look in symmetrical swing. We got sell side liquidity internal right there below. So there's a good chance that we're going to come down and hit that 187 before we see this move any higher. So with that, we could say our daily bias is bearish. So daily bias bearish. And we'll see if there's any additional high time frame points of interest. We can use our fixed range volume profile and look at this current inner dealing range. All right, 193, we're right at that. And then let's look at our larger dealing range here. And we can see our volume node point of control is back around 180. So I am going to put that on the chart for Apple. And we will say volume node point of control or point of interest, however you want to label that. And we'll take this off the chart. You can see that volume node point of control is right inside the weekly fair value gap as well. So there's some confluence in that area of why we might come back down to it. Also have a daily fair value gap right there as well. Okay, so then we'll drop down into the 4-hour chart. On the 4-hour chart, we are going to adjust this here. Okay, on the 4-hour chart, we have some additional arrays that are not on there that are sell side liquidity. So we got internal sell side liquidity here. Okay, we already have that one. Didn't have enough candles selling down there to call that sell side liquidity. And we got a little one here as well, or it wasn't deep enough. Really, we're looking for sell side to come back down below a previous low or previous high. So you can see on this one, gave us sell side liquidity because it came down below that low. This one came down below or right to that low. Okay, this low came below that low. So that's what makes it liquidity there. You could also say this one, but we're right. I mean, we can mark it, but we're right there, right near it. So that's going to be also sell side liquidity. So we have our targets. Now we're on the 4-hour chart again. We're looking at premium discount. So looking at where we are in this internal dealing range, that is in this bigger dealing range that we were looking at. On this small dealing range here, we are at premium. So we're expecting price to come again. We're at premium on both the internal and the larger dealing range. So we are expecting price to come back down into at least equilibrium, if not discount. Okay, we're really looking to pick up, entries in discount. So minimum 182, but inside 182, well, equilibrium is inside that weekly fair value gap. We also have our point of control, volume node point of control, right down around where our 61.8 to 70.5 optimal trade entry zone is. Interesting enough. So lots of confluence for price to come back down into that 175, 180 range. So we got our premium discount arrays. We've looked at, again, this optimal trade entry right here. We came down, broke that low. Let's see if we traded into a displacement on the 4-hour chart. So I don't see. Oh, there's a little baby fair value gap here that we traded up through and closed. But we broke below this low here, so we had a change of character. Okay, traded back up into this little micro. I don't like the displacement there. It's not convincing enough, but it is technically, there's a better look, right? We got right back up to 61.8, not all the way to 70.5, but that right there was a micro or a small smart money reversal, and now we're selling off from there. And so it counts even though it's not super convincing. So we got our most recent optimal trade entry right here and our market structure. Again, we broke below this low. We can slap on right here. We can also say that this low here got broke. So we've seen a change of character, right? And again, there's our low, there's our high, optimal trade entry, right? Change of character. Targeting probably this low right here, at least 187, if not lower. Again, in premium, looking for equilibrium at the minimum, not looking to take long entries if we at least don't get below equilibrium. Dropping down to the 1 hour time frame. On the 1 hour time frame, we're looking at market maker buyer sell models. Well, we've already identified that. We are in a market maker sell model because we have taken this top, we've come up, we've changed character, we've seen optimal trade entry. Okay, now we're selling down. Market maker sell model. So write that in your write that wherever you would track something like that. Also, we got our daily bias bearish. So it's good when our market maker model also matches up with our bias. Decent indication that we already missed our short entry here, but if we see price come back up into a level of displacement, like let's see, and no guarantees that we do because we've already seen price trade back up into the displacement, but if you look here, we got a displacement. We've traded back up into it. Not sure if we're going to get back up to that one, but we also have more displacement here, and we've already traded back up into it. But if we were to come down and pop back up, could be another short entry. So just be watching for those levels of displacement, or be looking for those breaks of structures or those change of characters, where we take out a low, then we pop back up, trade back up into. Again, here's a perfect example, right? Okay, we came up, we saw displacement candle, fair value gap, right? Let's mark off that fair value gap. Okay, we came back down, we broke, candle low, not quite the wick, but close enough. Traded back up into that displacement. There's your short entry, right? Caught a wave down below an old low. Okay, it's not rocket science. Just got to know what you're looking for, right? And what we're looking for is a low to be taken or a high to be taken, displacement to occur. That's your institutional order flow, okay? Then you're looking for price to pop back up into that fair value for one last go around for institutions and smart money to be able to get in, and then they drop it to a previous high or previous low, depending if it's a sell or a buy model. Okay, on the 1 hour, we've also looked at the fair value gaps. We got 3 fair value gaps right here. Previous day high, let's see, Friday. Previous day high is also about relative equal highs. So we got a previous day high here. And then Friday's low also looks like we got equal lows. So both of those are important, previous day low. Okay, so we have our range from Friday. Be looking to see if we break out or break down from that current range. And then we have our targets, fair value gaps, buy side liquidity, heading down, sell side liquidity, right? So those are our targets there. Got our market maker model, got our fair value gaps, got our previous day high low. So now we're going to drop down to the 15-minute chart. Again, the 15-minute chart is really about your intraday stuff. Not much you need to be doing as far as setting your chart up, but you could be looking at what happened on Friday and using some of your tools to identify market structure shifts and kind of where we are, where price is, if you will. So most recently, on the 15-minute, came from premium, headed to discount, right? Right now, on the discount side have not got back to the previous low. But we did see price pop back up to equilibrium. Most recently, we've seen a bearish change of character. And so we can, within pretty good, expectation and reason, say that we're going to probably target this low. And if we take that low, okay, then we're most likely to pop back up into a fair value gap, or if there was displacement on the way down, pop back up there and then target additional sell side liquidity, because we know that on a higher time frame we just came from premium. And so we're going to be targeting discount levels to get more buyers to step back in. And then if we drop down to the 5-minute chart, we're looking for intraday liquidity grabs, market structure breaks, same kind of stuff on the 15-minute chart. As the end of the day, peters out, we look like we saw kind of liquidity grab here. It just clears out liquidity. It goes both ways, right? Dumps down, pushes back up, or pushes up, dumps down, takes out liquidity here, runs stops, right? Just into the end of the day. And then we saw kind of a final push back down without getting below again the previous lows. And so, when you're watching the 5-minute chart or watching the 15-minute chart, again, it can be really helpful to have your smart money concepts on, or your market structure right here. I'll show you this one. It looks a little bit different, but this one shows market structure shifts, only market structure shifts, and that's the market structure breakers. But it will also show you a breaker. Let's see if I can find one. It will show you the actual candle that acts as a breaker from the market structure shift, which is cool, because here you have a market structure shift in this displacement candle. Then you come back down here and you have this candle, both these candles, right, close above the market structure shift, right? Although this one closed below a little bit, these were the breakers, and it ends up being a long entry off those breakers, where you get another displacement candle, you get a nice bounce there. Similarly over here, you have a market structure shift, right? But you didn't actually get any breaker off of it, because this is a market structure shift to the downside, right? And then we pop back up above it. And so there was no actual breaker. What you would wanted to see if you see a breaker is the shift to occur, price to come back up, be rejected by that level. That would be your breaker, and then continue downside. But this ended up being into market hours. I think they actually, oh no, that's a breaker to this. But here's a better example of the bearish breaker, right? You have a market structure shift, price traded below, broke that low, price came back up, was rejected. Okay, there's your breaker. You can take your short entry in a breaker or your long entry in a breaker. Here, price went back up a little bit into that displacement or a fair value gap, and then sold down there. But if you would have got entry in this breaker, that's good enough. That's short entry, right, in the breaker. Trades a little bit higher into the fair value gap, dumps down, would have caught a nice move, targeting a previous low, right? Where's that previous low at? If we took entry in the breaker, previous lows right here, boom, right? Fair value gap here, trades right down into that fair value gap. Found support. Okay, now we're probably going to continue to attack sell side liquidity. So hopefully this has been helpful for you guys. I'm going to post it up on YouTube and put the link out on the Traders Helping Traders Discord, also on the Rawstocks Discord as unlisted. So this is private for you guys. It's not going to be shown on my YouTube, and it will not be released to the general public. So this is a service or a video that's only available to premium members on the Traders Helping Traders Discord, and available to members on the Rawstocks Discord as well. So please don't share this video with anybody else. This is special for you guys, just to give you guys a little bit of value and advantage heading into the market, where the rest of the general population will get it after the first day of the market trading hours. on whatever week we're heading into. So hopefully this has been helpful. Happy New Year's to you guys. Don't forget to check out the description below. Like, subscribe, share with all your friends. We're really close to being able to give away a free t-shirt when we hit 500 subscribers. Also, our Rawstocks Discord is growing very quickly. And there are some specials there for premium members. I think there's 7 codes right now for a free month membership that is using code only10 when you sign up through wap.com. So again, Happy New Year's. Good luck to your guys' trading. And if you have any questions, feel free to reach out. All right, take care, guys.